Hey everyone, you're welcome again to my channel, and on today's video I'm going to be addressing immigrants, international students, newcomers to Canada, because it's that time of the year whereby you'll be receiving something called the tax slips that you need to file your taxes. And if you're new to this and as an immigrant, you need to watch this video to the very end. On today's video, I'm going to be sharing with you how to pay less taxes legally, the best tax credits and deductions for you as an immigrant, and how to use your RRSPs, your TFSAs, and other tax-free savings accounts to your own advantage. And most importantly, how to avoid losing money to unnecessary taxes. This is interesting, so please stay glued to this because I'm going to share this in more details. And if you're worried about paying high taxes, you want to know how to save money legally and keep more of your paycheck, make sure that you watch this to the very end because I'm going to be sharing some bonus money saving tips you don't want to miss. So the good news is that Canada has a number of tax credits deductions, and these deductions or strategies can help you keep more of the money that you have earned over the year. Now we're in 2025, we'll be filing taxes for 2024. And this is the time whereby you can find out how you are able to save more money rather than pay more taxes in this year. So today I'm going to be breaking this down for you, whether you are employed, whether you are self-employed, whether you are studying, or you have just arrived in Canada. This video teaches you all that you need to know in a few minutes. So I want you to stay glued to it. Please call a friend to come and watch this so that you don't miss out on this. But here is a disclaimer. I am not a registered financial advisor. I am not a tax professional. But these things I've learned and used and researched over time and has worked for my family. And that is what I'm sharing with you today. So let's get right into it. So before we actually jump into the ways in which we can save our taxes, let's quickly break down some of the taxes or how it works here in Canada, because understanding this will help you maximize your savings. I have about 3 videos in the past where I shared how to maximize your tax returns, explaining which province pays the most taxes and much more. I will leave the link down below, and also you can also click here to watch it, and this will help you to be able to refresh your memory about the things I've talked about regarding taxes. It will be helpful for you as a newcomer here in Canada. Now, Canada has a progressive tax system, which means that the more you earn, the higher your tax rate. But the government also provides tax credits and deductions to reduce how much you pay. So a breakdown of it is that federal taxes or federal rates ranges from between 15 to 33%, which depends on your income. So the more you earn, the more taxes you pay. And also depending on the province that you actually reside in, these federal taxes also vary. So the rates actually differ per province. And of course, there are different tax rules for students, for workers, for business owners, and for families. Some of the tax slips that you'll be receiving at this period will be: 1, your T4, which your employer will give to you if you actually work for an employer. And then you can also receive a T4A. This is from a university if you have received any bursary or grants or scholarship or awards within the course of the year. You will be receiving this from your institution, and CRA will also be giving you a T4A if you, I remember in the past when there was COVID and there were some COVID benefits that were given to, some people that actually benefited from it. The CRA gave out the T4A to this regard. So for maybe like Canada lockdown benefits, Canada recovery caregiver benefits, Canada recovery sickness benefits, all those emergency response benefits that a couple of people received during the COVID season. These are T4As that the CRA will give to you to be able to file your taxes. If you're also self-employed and you receive commissions from whatever job that you have done, you receive a T4A. If you also have RRSP, that's the Educational Assistant Payments. These are payments made to your registered education savings plan. You receive a T4A as well. If you also have pension retirements or other sources, these are T4As that will be given to you. If you also received like grants or scholarships, incomes from research, or all these things from institutions like I mentioned earlier, you also receive a T4A. Like medical travel assistance or you have like a registered disability savings plan, you will receive a T for it. There are a couple of them as well, so look out for whatever you receive. Another tax slip that you can receive will be your T5. And for T5 slips, these are for income interest that you actually receive on incomes on investment from non-registered investment accounts to the government of Canada. So it could be interest from your savings account. If you have a bank account that you save money over time and it has accrued interest, you will be receiving a T5 slip from that institution. You're also eligible to receive a T3 for income allocated to you as a beneficiary by a trust. So if you have had investment incomes from non-mutual funds, or maybe those that are non-registered accounts, you will receive a T3 slip. You can also receive a T2202 from your institution, and this is like an enrollment certificate. These forms are for students who have paid more than $100 in eligible fees for courses beginning from their year to a particular calendar year. So this will be given to you from that institution. So there are so many other tax slips that you will be receiving if you fall into any of these categories and more. So look out for it and make sure that you have all these tax slips collected before you file your tax. If you do not file your tax with those tax slips, you are eligible to have CRA come banging at your door that you have not you have actually withheld some things from them, and you might be slammed with a fee. So let's talk about the tax credits and deductions and how to reduce your taxes. So one of the best ways to pay less tax here in Canada is by taking advantage of the tax credit deductions. And here are a few things that you need to note. The GST or HST, if you earn or you are a low income earner to a moderate income earner, you will receive what they call a GST, and these are paid every 3 months. So if you fall into a low to moderate income earner, you will be receiving a GST every 3 months. Then there's also the Canada Workers Benefits, and if you are actually working and you also earn a very low income, you can get this tax refund from the government. That's the Canada Workers Benefits. There's also what they call the moving expense deduction. This is also something that if you have reason to move from a new province for work or for school, you're eligible for you to claim like travel or storage or rental costs as it pertains to you moving from these provinces. So please ask your tax preparer for all these things. Some of these things you might not know if you are not eligible for it, or if you don't even know, there's no way you want to claim it because you don't know. There's also the childcare expenses, and this is for you if you have kids and you pay like daycare, you pay after school programs, you pay babysitting for your children. These are costs that are deductible to be able to reduce your taxes. Another one will be like your education and institution credits. So if you're a student and you're taking courses or you're upgrading your skills, you need to claim tuition fees, student loans, interests, things that you can claim back to be able to reduce your taxes. So if you probably are in that category of like you have a loan from schools, or you have like tuition fee that you are paid, you are eligible to reduce your taxes with all these credits. So please take note, and you'll be receiving some of this T4, T5 or T2202, depends on what is you fall in the category of it. But one thing you must know, that even if you don't owe any taxes, these credits can sometimes give you a refund. So always claim that, and you need to be able to let your tax preparer know a lot of things that you have made expenses on. So for me, for instance, I will keep all my receipts, whatever expenses, even if you are unsure, just keep them. And when you pass them on to your tax preparer, they will be able to advise you if this is eligible to be filed as a tax deductible or if it is not. So just keep them, you never know. Now let's talk about the RRSP and the TFSAs. And these are about one of the smartest ways to legally avoid paying like high taxes using all these tax-free savings accounts, because some of them are free. You can save money in them, and then you can also withdraw free. So they work in different ways, but I will explain. The RRSP, which is a registered retirement savings plan, is in a plan in which you or your spouse or your common law partner can contribute into that account. The yearly RRSP contribution limit is the maximum of the money you can contribute to your RRSP savings plan in a given year. And this limit is based on whatever you've earned in income in the previous year. And the annual limit is set by CRA. For instance, you can't just put money into your RRSP. CRA will set it as well. When you file your tax for a particular year, they will tell you this is how much you can contribute, or the limit that you can contribute in this new year. So it is, like I said, it is the maximum of the money, the maximum of whatever you can contribute into this account will be given to you by CRA, and it is based on whatever you have earned in the previous year. So it's not you that sets it. So you can find this in your notice of assessments when you file your taxes. You can see that, or if you go to your CRA My Account, you'll be able to also find that amount there, and that will help you to determine how much you can put into your RRSP. You can withdraw money from your RRSP, your retirement registered savings plan, at any time, as long as it is not locked in. But the clause here is that if you have to remove money from it, you will be paying tax. That's for the RRSP. You can take money from it as long as it's not locked in, but you will be paying taxes on whatever you have withdrawn from your account. So deductible RRSP contribution can be used to reduce your tax. Any income you earn from your RRSP is usually exempt from tax. So as long as these funds remain in the plan, you don't have to pay taxes. You usually have to pay taxes when you receive payments from the plan. I hope this is really clear. Let me explain again. Your deductible RRSP contribution can be used to reduce your taxes. Any income you earn from your RRSP will be tax exempt. You won't have to pay tax on it as long as it is still remaining in that plan. But generally, you can pay taxes when you receive payments from the plan. So for every dollar you put into your RRSP, it reduces your taxable income, which means you pay less tax. And then your money grows tax-free until retirement. Don't forget that it is a retirement savings plan. So as long as your money is there, it continues to grow. But as you begin to have income on those monies, you'll be paying taxes when you take the money out. Also, if you are self-employed, this can also help you to be able to save more money on taxes. So you want to speak to your financial advisor or the tax professional that can help you better dissect this, so that you know exactly what to do if you are self-employed or if you are also employed. So now let's talk about the TFSA, which is the tax-free savings account. And your TFSA is actually a registered account in Canada that allows individuals to save money and earn interest on it tax-free. The annual contribution room is 7,000, at least for the past year. So you can try to maximize this if you can. They will tell you max it up, max it up. So if you can max this amount up, it's good for you to be able to save money, to be able to reduce your taxes. You can actually transfer money from your RRSP to your TFSA, but you will need to pay taxes on it. If you move it, don't forget, I would say your TFSA is actually a better savings plan for you than your RRSP. But if you have money in your RRSP, you can actually move money to your TFSA, but you'll be paying taxes when you move. Don't forget, on your TFSA, you don't have to pay money when you deduct from it. But the other one, the RRSP, is your retirement plan. They don't want you to touch the money. So if you move money, if you touch money, if you change plan, you are going to be paying taxes on that. You also need to note that with your TFSA, you can contribute up to your annual contribution limits. Like I said, it's 7,000, at least for the past year. You can also contribute money to your spouse's TFSA. For instance, if you max yours out, you can pay into your spouse's TFSA, and then contributions are not tax deductible. Then any money you earn inside your TFSA is completely tax-free. You see why I say your TFSA is a better savings plan for you. It helps you to keep money, it helps you to save money, and then when you take money out, it is still tax-free. So with RRSP, when you save money and you want to withdraw your money, you pay taxes. With TFSA, when you save money and you want to withdraw money, it is tax free. So just know the difference so that you know which one to be able to prioritize and put more money to be able to max it out. I will always say TFSA. Then TFSA is also perfect for saving, for investment, for growing your money without tax penalties. Like I said, unlike RRSP, with TFSA you can take money out whenever you need it. So it's like your savings account. If you don't want to put money where you constantly be touching it, you can put it in your TFSA, and then when you probably need it for maybe your school fees or something important that you need money for, then you'll be able to take the money out and it's completely tax free. You won't be charged any taxes. So if you're just starting out, try as much as possible. If you earn well, try to max out your TFSA first. It is very important for you because it's the best way for you to build wealth in Canada tax free. Okay, if you're self-employed, here's how to be able to pay less taxes. So if you probably have like a side hustle, those of you that have side gigs that you earn money from the side, I always encourage you to register your companies. But so many people just feel they want to eat all the money. But if you have all this, or you have a small business, Canada allows you to be able to deduct business expenses to lower your taxes. And that's important because you must be a registered company to be able to do this. So register your hairdressing salon, register your nail tech salon, register your food business, register all those small businesses that you have, because you'll be saving so much money even on taxes across the year. So let me tell you some things that you can save money on. For instance, if you work from home, like if you probably cook, you use your kitchen, you can save money by deducting like your rent or part of your mortgage, whatever you pay on your mortgage, on the square feet of that space that you use. So if you use like your home office, you have an home office, or you have a space that you use in your house like an office space for your business, then you can claim the square foot of it as like a workspace for you. So you'll be getting that portion of that amount as a refund when you file your tax. So some things that you also can get refunds on are like internet services if you use that for your business, electricity bill if you use that because you're also working from home. There are also other business expenses that you can write up as a business owner if you work from home, such as your office supplies, such as your laptop if you buy one, that's what you use, software, subscriptions, you have internet, your phone, you have travel or transportation costs. You can always write some of those expenses off because you are registered as a business. You also have your vehicle expenses. If you move around, you're delivering food, or you're delivering this or that, or you have to meet up with a client, or you're checking on, like I also help with finding accommodation for immigrants. I help to go around trying to look for where to find accommodation. I have Miles IQ that helps me to track my mileage. I can use that to be able to deduct or to reduce my expenses as well. And that one will also go into my tax deductible when I file my taxes. So those are things that you can use, whether for when you buy gas, you can have an average cost of how much gas you spend going from point A to point B, whatever insurances that you have, your maintenance costs, all these things help in your business, and then you can claim these expenses or write them off when you file your tax. But the tip again, like I said earlier, is that please keep all your receipts. CRA will ask for proof of expenses when you file your tax. In fact, it's like CRA always comes for you because they want to see that you are doing things right, especially as a small business owner. If you start off, they will probably think you want to claim everything, or your tax preparer has really done something off in your business, trying to be able to make you claim so much. So they will come for you. So they need evidence of these receipts or these things that you have claimed. So please keep all these receipts so that you are not found wanting. So final tip that I will say is that how to prepare for this tax season is that you should file your tax on time. Whatever deadline, I'm not sure about the deadline for this year, but whatever deadline that it is, try and file your tax earlier, and that means you get a refund earlier if you are eligible for one. So file your taxes earlier, keep track of your receipts and the expenses, use, like a software, a tax software. Some people use double tax if you want to do it by yourself. Some people, if you are starting off as a new immigrant, if you have a bit of financial knowledge, you should be able to do it because you really have not so much to file. But as you go on, and if you have added businesses, like I have so many, like I have a business, I have my YouTube, I have our Airbnb, there's so many other things that we add up. This becomes more complicated, and you need somebody more professional to be able to help you harness all these things together so you don't get a slam from CRA. So you want to be able to find an expert that can help you file, and I think there's wisdom in that as well. So please find or hire a tax preparer that will be able to help you do all these things. And there's so many of them. Even if you Google it, you'll find so many that that can help you out. Just check them out with how much it costs. I know they range from like $30 for individual tax preparer, for individual person that wants to file. Then as you file per family, and as your filing gets more complicated, when you have all these additional things, small businesses that you add up, it becomes more expensive. So you can find out and see what you find there. Then you should also stay on top of information, because tax laws always change. So make sure you are up to date with whatever applies in your province. There's so many updates that come up by the day, by the year, so you want to stay abreast of it so that you are not caught unaware. So remember that saving on taxes is not about avoiding taxes, it's about using legal strategies to keep more of the money that you have. So you want to save more on the money without spending more. So it's wisdom to know how to do that, and that's why I'm bringing these videos to you. So let me know what you think. Did you learn something new today? Let me know what you have learned, and put it in the comment section and let's talk about it. You can ask 1 or 2 questions if you need clarity, and I'll be able to answer that for you. And if you want more tips on saving money, surviving in Canada, or making smart financial decisions as an immigrant, hit that subscribe button and turn the notification bell on. You can also check my previous videos on how to earn passive income, which also adds up to whatever monies that you need, and this is to your own advantage. I'll leave the link up here, or you check it down below if you want to watch it. I'll also be dropping more videos on budgeting, finding a job, growing your income here in Canada. So please stay tuned and continue to watch my channel. So I'll see you again in another video. Stay blessed and keep warm. Bye guys.